Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. Again, it is a Friday, so I'm bringing this Friday energy to you guys wherever you are. I hope you're having a great day. We got rain again here in Seattle. I was hoping we could hold on to that sun. It was there for a couple weeks, and man, I loved it. But you know, Seattle, we got to keep our green. So we got a little bit of rain. It's no problem though, because we got Sam Hales on the podcast with us today. Sam is a manufactured housing, a mobile home park guy. I love to talk this topic because, you know, we own a couple of them. We want to buy more. So we're going to get the wisdom out of Sam today. He has over 300 million assets under management with the Saratoga Group. He's been in the game for a long time, so I'm sure Sam has a lot to share with us today. So Sam, thanks for hopping on the show.
Gabe, thank you so much. Yeah, it's raining over here in the Midwest as well. So that's
no complaints.
That's too bad, right?
You gotta take the rain for the green.
Yeah, that's true. That's true. So, no, happy to be here today and looking forward to the conversation.
There you go. I told you before we got on here, we always like to start with stories and hear kind of how people got from where they were to where they are today. So why don't you take us back, you know, way before you knew about real estate and tell us how you got in and what brought you to where you are.
Yeah, awesome. So background is engineering. I was in tech in the San Francisco Bay Area for a number of years and bought our first home. My wife and I spent evenings tearing up old carpets and refinishing hardwood floors and all sorts of stuff, like, you know, swinging a hammer and making it happen. And when we sold that home, we did well, right? I mean, this is in the San Francisco Bay Area, and we're like, man, we should go do that. Like, tech's fine, but like, we should do that. So I kept my tech job, but on the side, we were kind of started to flip some houses and stuff like that. I mean, isn't that how 99% of us start?
Yeah,
is we
start there, doing wholesales.
yeah. So anyway, and then actually started a fund doing single family homes.
Oh, nice.
in the San Francisco. And so this was right after the financial crisis.
Yeah, in the Bay,
10, 11, 12, like we were buying homes in Oakland for like $100,000. I mean, it's crazy to think back.
6, 8.
Yeah, it's crazy. Like, oh man. But anyway, so did that for a few years, but that's hard, man. Like, you know, it's like you're buying a new roof here and then you got to drive 10 minutes to your next one. It's for one family or one resident. And you're like, this is not super efficient. And so I really started looking around, and that's when I found mobile home parks. And so we bought our first one in 2017.
Oh, nice.
And gosh, 2 months into it, I was like, we are going to drop everything else we were doing. And we were doing also, we had like little boutique hotels, some office, I mean, a few different things.
Interesting.
We're dropping everything we're doing, and we are going mobile home parks all the way. So we, like I said, bought the first one in 2017. I don't remember exactly how many in 2018, but anyway, we bought around 1,000 pads a year because we're up to just over 7,000 pads at this point.
Oh, wow.
And it's been an adventure. And, you know, man, the book is going to be fun, right? I mean, I'm not writing a book, but it's someday like the stories that
when
you get
write a book, it's
from owning mobile home parks, man. You're like, you cannot make this stuff up. But I love it. I totally love it. So anyway,
that's awesome.
That's the background.
So let's no, I love that. You know, we own a couple mobile home parks, and I really like the asset too. When you first got into it in 2017, what was it that made you say, man, this is it, this is what I want to do?
Well, I had listened to a bunch of podcasts. There weren't that many at that time, specifically about mobile home parks. But man, like on the weekends or whatever, it's like I'm out doing yard work or whatever, and I'm just jamming with those. And so at that time, basically the messaging was, hey, it's mailbox money, super easy. You've got these residents and they stay forever and they're super sticky, and so it sounded really, really easy and really, really great. The first one we bought, I mean, like I said, a couple of months in, we were like, hey, this is what we're going to do. But it wasn't easy, very operationally intensive. But it was like, there was so much opportunity. So there is no other sector of commercial real estate where you can repeatedly buy community or whatever, buy assets, buy real estate where your rents are half of what they should be. But we've done that over and over and over again. And where we're buying on average maybe 60% occupied mobile home parks, where you've got that sort of vacancy opportunity, and then rental, the rent price opportunity. It's repeatable, like over and over and over. So, yeah.
Do you still feel, you started in 2017, it's 2024 now. Do you still feel that opportunity is there, or has the kind of cat got out of the bag, or whatever that phrase is? Has the news got out and people now
I mean, I think it's somewhere in between, and we can talk a little more about that. But we closed a park last week, Greenville, North Carolina. That was our 13th park in Greenville, and rents, we just bought it, they're $225. Wow. They should be $450. I mean, so does it still happen? Yes. Is it harder to find? Much harder.
Yeah.
But they're out there. Yeah.
Yeah. Makes sense. Yeah, absolutely. So mobile home parks and long-term stay RV can sometimes operate in a similar manner? Do you guys also buy long-term stay RV, or do you 100% only focus on, getting a manufactured house on the lot?
If you'd asked me that 18 months ago, the answer was just mobile home parks. But we're now doing some long-term RV, and we love it. So I'll give you an example. We have a park in Norfolk, Nebraska. It's a couple hours from Omaha. And it had a adjacent property that we bought that was completely vacant, undeveloped, and we got it entitled and built into a long-term RV park in less than 12 months.
Wow!
And it
entitled
is now
and built. That's pretty quick.
Entitled and built, yeah. And it is now 75% occupied. I mean, and the occupancy happened from January to March.
Yeah.
Well, I guess we're April now. January to April in Nebraska.
Right.
Right. I mean, it was freezing. Anyway, so I'm sure we'll be 100% or virtually 100% here in the next few weeks. But so, yeah, we love a long-term RV. So we're building another one right now, also in Greenville, North Carolina. And we plan to so we have a construction company. And so with that construction company, we're pretty focused on building kind of add-on long-term RV parks.
Yeah.
So we're pretty excited about that space.
Oh, add-on. So you guys look for a mobile home park or an RV park that's already operating, make sure it cash flows, and then you add additional spaces onto it.
That's right. It's a lot easier to get approval for an RV expansion than it is mobile home park for
whatever
reason. For myriad reasons. But actually, the one that we're doing right now is pretty interesting. So we have it's a large mobile home park, and then it came with a smaller mobile home park across the street. It was one purchase, and it was kind of one community.
Yeah.
But the smaller one had a bunch of old homes in it, but it also had a nice little some lakefront access.
Okay.
And so we're looking at that. It's like, okay, there's some empty lots here. There's some homes that need to be demoed out of here. Why don't we pull those out and let's just turn this into an RVP? And the cool thing is they're on septic there, but you can, because the septic load is a lot less for the RVs, we're getting 2 to 3 RV spaces for every MH space. And instead of $400 a month in rent, which is what our mobile home park rents are, we're getting $500 to $550 on the RV. So,
So I was about to buy a park. It was an RV park out in North Carolina.
Okay.
And I had talked to a bunch of operators essentially, and they dissuaded me from buying this particular park because they said that the site width was not in line with what people expect in today's market. I actually kicked myself because I feel like I should have bought that park, but um, they were saying that sites now need to be wider than they used to be because RVs have like 900,000, kick or pop
Pop
outs.
outs. Yeah, that's right.
Do you feel like that is necessary? Because we have a couple, long term stay at our parks too, and our tenant, there are some people with pop outs, but most of them, the tenant base that wants to stay in a park long term, I feel they don't have those fancy things.
Yeah.
What's your thoughts on like
Um,
site width for
yeah, and we probably should have like one of our guys that's heading up all the development. He's full expert on this stuff. So we talk more about kind of the pull through versus kind of the
mhm,
back end sites and
back
that
end?
sort of thing, and making sure we have enough of those pull through sites for the big rigs and that sort of thing. So I couldn't tell you exactly on the width, but I think you're right, which is we're not targeting the $800,000 super fancy, right? We're targeting something, people pulling up behind a 350 truck and
Yeah,
dropping it, and they're working, right? They're whatever, they got a construction job there,
yeah.
and
They're in the
so
fields
it's
doing whatever. Yeah,
yeah, that's right. It could even be a corporate unit or something like that, and those are
yeah,
not super fancy. So that has not been an issue for us. But I couldn't tell you offhand exactly what the width is on
yeah.
the
No,
sites
no,
that
no.
we have.
Yeah,
Yeah,
I just I when I was told that, I said I get I get the thought, and you're right. People are buying
yeah,
bigger RVs, but in terms of long term stay, I don't feel like that's applicable. I feel like people aren't going to buy the massive, $300,000 RV that has
yeah,
these,
yeah. That's right.
really large
Yeah,
pop outs.
yeah. That wouldn't make sense. Yeah,
Yeah.
I agree.
Um, so you've been really successful at finding deals. That's always the hard part about anything. If you want to buy industrial, if you want to buy mobile home, multifamily, finding the deal is one of the hardest parts. Actually, getting a good deal.
Yeah.
So what do you guys do, and how do you do it so consistently?
Well, yeah, it has been a little less consistent the last 18 months.
Mm,
But let me tell you, I think what has worked for us and what we're doing now, which is is turned out to be super interesting for us. Um, so what we found in the mobile home park space, there are brokers. There's kind of national brokers, and they know all the buyers. And so if they get a hold of a listing, they send it out. I mean, you're competing with who knows how many people for
yeah,
that deal.
people who
Um,
will buy like a five cap and just sit on it,
or a two, or
or
because
two. Yeah,
it's like, they're paying all cash, and it's like, well, with a couple rent raises later, and it's like, well, um, but anyway, so but one thing we found is that in a local market, those owners or those sellers, they don't necessarily know those brokers. I mean, it's a
mm,
very fragmented, and so we've had a lot of success with kind of targeting a market, finding a local broker who
mm,
doesn't know all these buyers.
yeah,
So they've kind of got the opposite problem. They know, and Greenville, North Carolina is a perfect example where we connected with a broker there. We now own 13 communities. Every one of those except two came through that broker.
wow, okay,
And basically in fact, the first time when I talked to him about the very first park that we were looking at buying there, and we ended up buying, um, I said, hey, this is us, and we own quite a few of them. I mean, it was 15 or 20 at that point, and interested in this park. He's like, man, he's like, I'm so glad you called. I got all these people that want to sell trailer parks, and I got nobody to buy them. I
raising
mean,
your hand. I'm your guy.
my
I'm your
brain,
guy.
I'm like, what? So I'm like, okay, we're gonna be really good friends. I'm like, and here's how this is gonna work. Like, you can go to each one of them and tell them they don't even need to pay you a commission. We will pay your commission. Anyway, and
Yeah,
so he's made a lot of money off of us, and in turn, we've assembled a really fun portfolio in that market. We've that's been our most successful one, but we've done it a couple other places, and it's helped us scale a little bit, not as much as in that market. The other thing, and this is what's, so I mentioned like the last 18 months, we haven't bought that much. We did buy a portfolio in Kansas City last year, and then a couple others, but all of a sudden, just the last 3 weeks, we're starting to get a lot of opportunity.
Oh, that's good.
And basically what it is um, we've really vertically integrated. So when I say vertically integrated, like we've got software systems we've built, we've got our own, we've self-manage all of our properties.
Like you're not using AppFolio or anything like that?
No, we're using Rent Manager, but just there's some other workflow stuff and KPIs and whatever, and we've like built our own software there. But we've also built our own construction company. I mean, I never imagined when I got into this business that we'd have to have a construction company. But sometimes you buy a mobile home park and it's like, well, it was built 60 years ago, and guess what? Underground, like those pipes, they've reached end of life, and you got to like redo your sewer lines and what.
Yeah, we only have two parks, and we've had to replace the underground on both of them.
Oh my gosh! Okay. So you know what I'm talking about. So we've got guys and machinery and equipment, and like we go do that stuff ourselves, and we say, anyway. So what's happening now is we have groups, other operators that are reaching out to us and saying, look, I heard about this project that you guys did, or hey, there was that one, and like the Illinois EPA was involved, and you guys figured out how to. And so we're getting some of these hairy opportunities that are a little more challenging, but we're able to do that sort of work for a fraction of what somebody else could do it. So in fact, while I was in Indiana, we were looking at a community there. They're under a consent order from the Department of Health of Indiana regarding their sewer system, and we'll probably go in and build a new system. But we've done that. We've got guys that can execute on that, and they're getting quoted $3.5 million. Like I think we can do it for 700-800. So
$3.5 million for a sewer system? That sucks.
Yeah, exactly. No, it does. So that, but I mean, it's like if you don't know any, you know what I mean? If you don't have that ability, like that's how you have to do it. So So we think we're going to see more of that stuff. So that'll be interesting as well.
Yeah, that's great. I mean, the more integrated you get in an industry, the more opportunities come for you just because of, you start meeting new people, you start developing new skills, and just by nature, things come to you. Do you guys go away from well and septic, or do you want, everybody wants city water, city sewer, but it sounds like you don't turn your nose to a well and septic deal.
We get more concerned about a well than we do a septic.
Oh, okay.
And I know other people that feel the other way, but when you think about health and safety, like if you have a problem with a well,
it's a problem.
That's a real problem. Like people are drinking that water. Like that's a real problem.
Yeah.
And we've solved a couple of those, but we get a little gun shy about those. But as far as septic and even a wastewater treatment plant, we prefer that it's public and it's direct bill to the resident. That's what we prefer.
Yeah.
But I mean that doesn't
everybody
happen
wants
very
the
often.
easy deal.
Yeah, that doesn't happen very often. So we're not afraid to tackle those other ones.
Interesting. So you guys will do lagoons?
We've done one lagoon. That's the only park we've sold.
Interesting.
So what does that tell you? Yeah.
Yeah.
I mean, at some point, like if you own a lagoon, you gotta think at some point you're gonna have to change that. Like that's not going to be allowed.
Not sustainable. Yeah.
Yeah. So
yeah, we had one sent to us, and it was a lagoon. It was a great price, but I was like, I just don't want to deal with that. It's too scary.
Let me guess. Was it Oklahoma?
I think it was actually. Yeah.
They have so many lagoons in Oklahoma.
Yeah, it was from the Dorsey team, I think.
Okay.
Yeah. Cool, man. Well, hey, we have already run down our time. It's time flies on this podcast, so it is time to jump into the quick question round. Are you ready?
I think so.
All right. Starts with education, and it could be any form, could be books, movies, whatever, you name it. I need 2 recommendations, one for general life wisdom and then one for real estate.
And we're talking books?
No, it could be just any educational recommendation. Could be a podcast, could be a book, could be I don't know,
Yeah, got it.
anything like that.
I I've been I've been listening to a podcast recently. I listen a lot. Like I've listened to some of yours. I mean, I like kind of dabbling, but this one's called Drunk Real Estate. Kind of a
Sounds
funny
fun.
name, right? Um, but these guys are pretty astute, and I like podcasts where I'm getting information that otherwise I don't know about, and so they really dive into like some things going on with the economy, interest
Mm,
rates, the
mm.
Fed, that sort of thing. So that's been a really good listen. Um, and then outside of that, I mean, I um, also have like religious podcasts that I like to listen to, just for spiritual well being, there's a number of those that I listen to, but yeah, when I'm driving, I'm doing these due diligence trips. That's kind of a lot of time for phone calls or listen to podcasts. Yeah.
Plugging in. Yep, I love that. All right, next question is for your younger self. So let's go all the way back to when you first laid eyes on your first single family deal way back in the Bay. You're thinking about doing that flip. Go back to that version of yourself, look him in the eye, give him one piece of advice moving forward.
I mean, really is, and I've been accused of this anyway, which is um, being aggressive. Like I if I see a deal, like I'm going to figure out how to get it done. But in some ways, I look back and say I should have been more aggressive. Like,
Mm,
do not be afraid to go figure it out and make it happen. Like, jump in. You don't want to do something stupid or silly.
right.
But most of the time, I see the other problem, which is people are just afraid.
Gun shy.
They're afraid to take that first step. Um, and I think that's a key. Like if you can take the first step and buy the first property, um, you'll learn so much. I mean, beyond all the things you can listen to or read or whatever, it's like it's real, right? When you have to do it yourself and really figure it out. And I think
Yeah.
it just for me that was just so eye opening, and just the possibilities. Like, oh my gosh, like we got something here. Like we could do this, and it gives you a lot of confidence. So
Yeah. Yeah, you just gotta get that base of education, understand the basics of what you're doing. But after
yeah,
that, you just gotta go because you're not gonna really learn anything more until you do it.
yeah, yeah, for
And
sure.
you're gonna get hit in the face for sure. It's gonna happen regardless. Doesn't matter how much you prepare. Things will go wrong, but
That's right.
that's when you
Yeah,
learn and you just keep moving forward.
for sure.
All right. Next question is about the U.S. It is a big place. There's a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
It would generally be the Southeast, and I would say Northern Alabama. Probably not an
Okay.
answer you get often.
Yeah. Birmingham area.
Maybe even more like Huntsville,
Okay.
Alabama, and we've got a couple of mobile home parks in the Florence, Muscle Shoals area.
Hmm.
It's been astounding, kind of the growth in people moving in there, as well as obviously the impact on occupancy and rent growth there has been incredible.
That's great. Yeah, you are the first person to say Alabama. Surprisingly, we've been 400 and something episodes. I don't think I've had
Yeah,
anybody say Alabama yet. So
yeah,
there you go.
yeah.
All right, next question. You've already touched on this a little bit, but I'm going to ask it again. Favorite way to find deals? It all starts with penning that purchase agreement with the seller. So, what is your favorite way to generate leads and find new deals?
Yeah. So back to what we were talking about, what's been most successful for us is finding a local broker who doesn't know the national buyers and just really developing a relationship with them. That's been most successful for us.
Perfect. And a little bit
And
more.
Gabe, yeah, I was gonna say one other thing we've done, and we probably have 5 or 6 communities that we've purchased and found this way, is we have a bonus program for our community managers. It's actually anybody at the company. And so they get, bonused, and it's all laid out when they find a community. I mean, look, they're out there, they
Yeah.
network, they know other owners and especially other community managers. And so we've found a number of deals that way as well. That's been awesome.
Yeah, absolutely. So I'm going to dive a little bit deeper into the broker tactic
Yeah.
that you use. You're finding brokers that are not national brokers. They're not Marcus and Millichap. They're not, Newark. They're local brokers. How do you know that these brokers even deal in mobile home parks? You're not looking for single family brokers, obviously. How do you know that you're finding a commercial broker that has engaged? How do you target your outreach?
No.
I guess is what I'm saying.
So, yeah, I don't want to say it's a secret sauce, but yeah, what you'll find is, and I love when we find this, but you'll find a local broker, and they, it's like, all right, they sell some apartment buildings and they sell a little strip retail center, and then a mobile home park listing comes along, and they put it out on the local MLS, or they'll just put up a sign. So we found some from signs, we found some from local MLS. Sometimes they'll know enough to like put it on Crexy or whatever. And so if we see one on Crexy and it's not listed by the national, one of the national firms, we're like, oh, let's dig into that one. We actually have one right now in Tennessee that we're working on that just came through one of those methods right there. So and it's obvious that the listing agent has no idea like what it is they're dealing with and how it should be priced or anything like that. So,
and I'm assuming most of these are like 50 and under pads, right? I would assume if you had 100 pad plus, then you would go to a national broker or not. I mean, who knows?
You'd be surprised. Yeah, one of them we bought was a 113.
Okay.
And the one we're working on now is it's partially developed, but potentially could be like 400 spaces.
Wow, that's great.
Permitted.
Yeah, absolutely.
So, they're out there.
All right. All right. So much for the quick question round, huh? All right. Next question is lessons learned. Not we've already talked a little bit about this, that you are going to get hit in the face sometimes, but when you do, that is when you learn your best lessons. So give me a deal that went a little bit sideways, and then what was the biggest lesson that you pulled from that?
So we've made a ton of mistakes in mobile home park in our investments. What I love about mobile home parks is they're very forgiving. So because of some of the things we talked about earlier, like you can screw up and it can still be a good deal. And so we've got a number of them where it definitely didn't go like we thought it would. And usually, that means not to the downside sort of thing. And yet they still ended up being great investments. Now we do have one that, we haven't sold it yet, but we're going to sell it. And that's it. That was our second one in California. So I would say the biggest lesson learned for me is, and I knew this early on, but we still bought a couple of parks in California, is to go invest in places where your capital is welcomed. Because we bought, this was going to be a turnaround park. And we just couldn't get any cooperation, and the bureaucracy, it totally derailed the business plan.
Yeah.
Whereas, we go into northern
Oklahoma.
Alabama, or we'll go to Tennessee or whatever, and it's like, wait, you want to invest
fix
money
this park?
here?
Let's do it.
You want to bring your money here? Like, okay, yeah, roll out the red carpet. Like, let's make this happen for you.
Yeah.
And it's just such a, and so then you can like work with them, and it's a partnership instead of an adversarial relationship.
Yeah.
So it's, anyway.
Yeah, no, that makes a lot of sense. We're dealing with that out in Indianapolis for a self-storage facility we own, where we're trying to build on it, and it's obvious that the area needs it and that it would help. It's a benefit for everybody involved, but the township that we're working with is just a nightmare.
Yeah.
So yeah, you got to be wary of where the people you're working with.
Yeah.
All right, and that leads us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Awesome. I would say the best place is LinkedIn. So pretty active on LinkedIn. And it's just, LinkedIn / Sam Hales, Hales. And yeah, if you reach out, I'd love to talk about mobile home parks. And I try to listen as well, because there's so much that others, their experiences, that we try to learn from them. And that's one thing I found about the space. It's very collaborative. So if somebody's looking to get into this space, it's not just me. You're going to I'm happy to introduce you to others in the industry, and you're going to find a lot of people that are super, super helpful and I think giving. So that's been a lot of fun.
Perfect. So Sam Hales / Sam Hales on LinkedIn. I will put that link in the show notes. If you guys want to reach out, just click the little more in the description. It'll pull down that full description, and there you can find his link. All right, Sam, that wraps it up. Thank you very much for happening on the show.
Thanks, Gabe. Hey, really enjoyed it.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you want to support the show, just give us a review, like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.